BCE. Guys, I got an alert for this one. I did a podcast probably a little while back, and I had BCE in a stage 4 decline. But times have changed, and it really, here, I think, here is the breakdown line. Pretty clear cut. Monthly defined breakdown. Right here, this candle. Test, go up. Declining. Even here, right here. Started right over here. Declining. 12-month moving average. Hitting that support. Monthly defined support. And then you can say, oh, Pat, huge breakdown. It's going to continue. But the next month kept going down. And after that, no. So September, October. And this thing pulled back hard in November. When the markets kept going down, BC pulled hard. Got back down December. After that, January, February, back up. And we're challenging monthly defined support. Turn resistance. We're above it, so we have to wait for February to close next week, and we're hitting just a little bit more monthly defined support right here. Test, breakdown, now become resistance. So right at critical point, but all that price action above that 12-month moving average is making we're back into an uptrend, guys. We're gonna look on the weekly. Most likely this is gonna be in the stage 2. So the stage 4 is out. As soon as you had this close above that 12-month average, you shouldn't be shorting, but you don't go long because the 12-month average is still trending downwards and you see it's creating that price action. But right now you're above the 12-month moving average, inclining 12-month moving average. You're far away from the 12-month moving average, hitting into some support. So the most to reduce the risk of entry right here, I would not enter. Here's danger zone right here. This could pull back at any moment. If you really want to enter, you'd have to wait for a pullback, hitting that 12-month moving average, and then try another way up, guys. I think we're going to have to look on the weekly for some support on the pullback. Right now, this was defined, monthly defined resistance, broke through it, pulled back inside, so it didn't quite hold as support. And then after that, the month after went straight back in. So I don't trust too much this line of support on the way back down, but it still coincides with a 12-month moving average that's probably going to be angling upwards if we get down to here. So let's just wait to see what happens. Let's zoom in on the weekly. Let's see if we have some weekly defined. Give me my arrow. Okay, outperforming the SPX. Still outperforming. Right here, it's that gray zone. That's because we didn't have those 3 conditions. We were below our 30-week moving average. So it went gray. You never want to go long if you're below it. So a lot of whipsaw action. Those are those candles, those monthly candles that we saw go back below that monthly defined breakdown line. But right now, very volatile, very hard moves above the 30-week moving average. So what I could see if I zoom out, this is actually, we're starting to form a base. We're out stage 4, right here, close above stage 1. Not quite stage 2, guys. Ichimoku cloud, you see how it's bringing you back down. Then, sinking through that 30-week moving average, hitting that monthly defined support. Going back up, we're running through the Ichimoku cloud. We're not quite of it yet. So that's where we have to wait. Is this going to pull us back down the Ichimoku cloud, hit that support, that resistance turn support, and then go back out? And here is a place where you want to probably go long. Inclining. Oh, okay. Too many lines. Erase. Goner. Adios. You belong on the monthly chart. Move. Okay. 30-week average going upwards. Pull back. And here a close above monthly defined breakout line. the other monthly defined breakout line just a little bit above. So if we could get this right here starting to coil, cool, lower, higher lows, getting close to that breakout line, and we need the volume, because that's the thing what's missing right here. I don't see the volume. See huge red candle, big warning sign, and I have decreasing volume, not super duper. Remember, you want to see that volume candle above a horizontal breakout line, twice the average. So kind of shaky right here. So let's just wait and see how this works. This pans out, guys. But this is looking pretty good. Look, I always come back to it. If I didn't think we were close to the end of a business cycle, like economic cycle, all the indicators that I'm looking at, I don't know how many months we are far from really the non-revised metrics of employment, unemployment, tell us that we're in a recession, or gives clues to the market that they'll start pricing it in. These breakouts are hard to play. I can't go long on anything yet. At the end of the month, I'm going to really relook at the markets. I know the U.S. markets really had a strong rally up. They're probably going to start all be above those 12-month moving averages, so you can't short anymore. So you have to wait. But it's very difficult to play long. I know it looks, you're missing out on that crazy rally, but I got to respect my framework. I believe my better risk, low risk environment for better reward is to time the next leg down of the market. So that's where my focus is. I see these. So those strong rallies, the stocks coming back up. But weight of evidence style, I need to wait. I want to wait for that. I'm ready to wait for 2, 3, 4 months, the time for the market to roll out, for the economic data to get worse. If it gets better and signs are that we have enough fuel to go for another long period, another 2, 3 years of a bull market that runs without any worries, then I'm all in. But right now, if I look at these metrics, guys, let me just pop up the U.S. recessions. It's the same old story. Here's pull that out. Every time there's a recession, here's the unemployment's at highs, starting rolling over. You see when it starts going down, 138,000, 138,400 to 137,000 goes down. So this is why I say I think we're a few months off. I want to see the total non-farm payroll total number. I want to see a negative number. Already here, the unemployment rate's already starting to creep up. So if it keeps creeping up, this one's leading. So right now, this one's giving a sign. Remember, every time we went down, this is starting to go up. So this is what I call the fuel. Right here, I'm ready to springboard into a bear market. Ready to springboard into a bear market. Ready to springboard into a bear market. So it's very hard to go long. To go long here, you might go long for another 4 months, but you're really like redlining the economic factors right here. Well, maybe this could creep up a little higher, but we're pretty much high. So this one I have to wait, but this one can't go really lower. We already have the 10-year minus the 2-year already back into recession type territory. So as soon as that starts turning over right here, we're at bottoms of all these metrics that were indicators of recessions, guys. Same thing here. Fed's fund rate high, pause. As soon as the Fed pauses, because they know the damage is already done from that previous cycle of increase, and then that's what you're looking for. You need a pause, and after that, you know that they know they've done the damage already, and all these rates are fast forwarded, applied in the future, creating those problems. All these rates going up, applied in the future. So that's why we probably need more time, a little plateau. And then when we start crashing, they'll lower the rates. But they'll be lowering when we're down here. It's going to go up, then the lower when we're down here, it's going to go up, but it's never going to go as high until the bear market finishes rolling over. The fuel, see, this is fuel. When you're up here, combine that with when this starts creeping back upwards, here, the fuel, this is the fuel that gives you the power for a long-lasting bull run, all that. So these extremities. So right now, as long as I keep saying this, it's just like my brain's there, and I say I don't understand where the stocks keep going up. They are. You got to respect the price action. But these metrics have been repeated over and over. I just don't see the energy for this to sustain a long run. So it's higher risk to jump in now. Could break at any time. Staying on the sidelines for anything long. Really. So I don't know why I got sidetracked all the way to that. But same thing for BCE. It's been a while. I haven't checked a standalone stock other than the index that was showing signs of continuation breakout. And even here, if you break out, you have all this overhead resistance right here. So if you run, you're gonna start seeing, you're starting to form a big, see how this is starting to shape out? Big sideways move. If it break up above here, then I would really enter. But there's not much up room. Less upside than downside, I believe. Look at that. This is the downside. All this vacuum right here. Less upside. You're going to hit hard to support, hard resistance. More downside if ever it comes back and breaks down below that. So that's how my eyes are looking at charts right now. All right, guys. BCE, you're in a stage 2 breakout. Almost out on the weekly. But look, my weight of evidence, I just can't play ya. All right, guys. I still haven't found what I'm looking for.